Do not buy another property investment in your own name until you watch this video. Hey everyone, my name is Misiewicz from Optimise Accountants, and I want to talk to you today about Section 24, which is mortgage interest relief. This has come about in the year 2016-17 and was implemented at 2017-18 tax year. And it's being phased over a period of time until we reach the conclusion of its full integration into the tax rules in 2021. Now, I want to describe to you with some examples of how mortgage interest relief caps are going to affect you. Before I do that, please make sure that you press the notification button down below with the subscribe button to make sure you catch up with all the latest videos that we launch for you. So let's have a look at Section 24. Well, Section 24 is the amount of mortgage interest that you can offset against your taxable rental income. Let's look at an example rather than looking through all the law books, which, let's be fair, is a bit snoozy. In this example, you can see that this person has got £20,000 worth of rental income and £8,000 worth of mortgage interest cost, and that is going to be repeated for 2016-17, and we're going to look at the bit that's before the interest changes took place, and then we're going to look at the same numbers for 2021. Now, I appreciate that rental cost does go up, but we are going to try and compare apples with apples just to make sure that life is a little bit simple when we're looking at this type of impact. So you can see here that this person has got a profit of £12,000, and as a high rate taxpayer, by the way, I'm not going to describe about basic rate taxpayers. I'm just going to keep this really simple for this video. Most of our clients are high rate taxpayers, so it kind of makes sense to do this. But that's going to increase significantly, isn't it? Because look at the tax year 2021, where you can now see that there's a tax bill of £8,000. Now, HMRC have done something rather complicated, where they've said that they will give you tax relief on the mortgage interest, but at 20%, and it will act as a tax reducer. It will not be used in any other way. But you can now hopefully see how much tax that they used to pay at 40%, being a high rate taxpayer, you'd expect to see that, but now they're going to be increasing their tax liability against the profits of 53%. And I would say that this is a good example of how things are going to change, but I don't think it tells you the full story. And what I want to do with you is give you the more considerate approach, which is where we've got clients that are investing in London. They're not too bothered about income generation, they're more focused on capital growth. And as a result of that, you may also be in this camp. So how does this affect you? Well, if you're looking for capital growth and not looking for profit, you will probably leverage your property value as much as possible and just squeeze a little profit for repairs and maintenance. Well, we're going to go through this example, which again, for 16-17 and 2021, we're going to assume that the rent has not changed. So it's £20,000. Now, I appreciate it is going to change in London, but I want to, again, just compare apples with apples here. But one thing they have done is leveraged up as much as possible. Now, you're going to find that, actually, with people that have constantly refinanced their properties, they too are going to find this situation. So in the first example, you could almost assume that you've got someone that has bought a property, and in this example, they've refinanced it, or you're investing in London. Whichever way it is, guys, this is just a clear example of how Section 24 is going to affect you as an investor. And in the first scenario, you can see here that nothing really changes. There are still a 40% taxpayer. They will have an income of £20,000, and their mortgage interest is now £15,000 because they've used leverage. That's left them with £5,000 worth of profits, but that's been taxed at 40%, which is £2,000, which is leaving them with a net position of £3,000. And wow, doesn't that change in 2021? Boy, doesn't this change. I mean, if we look at this scenario in 2020-21, when Section 24 comes into full play, then we can start to see how this is going to affect you. You've got £20,000 worth of rental income here. That's not going to change in this example, at least. You have mortgage interest costs, which is still £15,000, but it's ignored for the purposes of the tax calculation. And therefore, you'll notice that their tax bill has gone up to £8,000, which is, wow, significant. Now, they do get this 20% tax reducer, as we described in the previous example, which is £3,000. But ultimately, what that means is that their tax liability is now £5,000, which you can see here the profits have been wiped out altogether. So they've now got this property. If they do have a major refurb going on right now, they will not be able to afford that refurb because all of their money is being paid out to HMRC. And this scenario gets even worse. In these examples, we've assumed that the mortgage interest rates are going to stay the same. Clearly, that's not the case. We know that bank interest rates have already gone up in the last 2 years, and that's expected to rise again in the future. So all of these compound changes are going to make this a gloomy picture. So the question is this going to affect you? And if so, please type in yes and tell me how it's going to affect you and how it's made you feel with all these tax changes being HMRC targeting you as a landlord. Is this fair? And describe to us how this is going to affect you, and hopefully I can come up with some solutions in terms of what might work for you. If you can type in no, if it doesn't make sense, or if it's not going to affect you, please type in why. And if there's anything I can do to help, then again, I will respond typically within 24 hours. Okay, we've talked about the problems of Section 24, and thank you ever so much for leaving your comments below. And as I mentioned, I will get back to you. Let's look at some of the solutions though, because I think it can be quite doom and gloom. Is it worth investing in property in 2020 and beyond? I absolutely think it is, but I do think it's really it's high time that we looked at some of the solutions. I'm a glass half full or glass full kind of guy, and I want to look at some of these solutions. So the first one that I want to bring to your attention is the fact that you could reduce your mortgage. Now, if you're reducing your mortgage, yes, you'd be paying 40% tax as a high rate taxpayer on that difference, but at least you're not going to be paying 50, 60, 70% in tax on the property profits you make. So reducing your mortgage may be a better solution than to keep buying more properties to compensate for the increase in tax. Don't forget that if you've got a rental property, you may want to increase the rental of your property, because ultimately, if the tax is going up, the competition is going to be driven down. Tenants are still going to need properties, so who's going to suffer really? Government. Well, it's tenants, and that's all your fault ultimately, because landlords like myself are just going to do one thing, and that's pass on those costs of tax burdens to tenants. And that is really, really unfortunate for people that can't afford to buy their own home, or people that do not simply want to own their own home are now going to be forced to pay that extra rent. Well done, the government. Do shop around. When do your mortgages expire? Is there an opportunity for you to maybe do a portfolio mortgage and reduce your interest rates? We talked about lowering the amount of mortgage that you have on a property. Well, if you're lowering the mortgage, you may be able to get a better rate. So do shop around, talk to your mortgage broker about that. Now, when you're looking at your properties, you may have a portfolio that some are doing really well and some aren't. You may have properties that are making a loss. Is it high time that those properties were disposed of? And as a result of that, that will bring your profits down? Sure. But does that mean that your Section 24 impact will also reduce? It could actually, because you've got more properties that are highly leveraged. Well, those aren't so good to keep. You may, especially if they're not making you any money. If you've got HMOs, different story. But if you've got single-let properties that are leveraged and making you very little money anyway, it may be time to dispose of them. So those are the kind of few examples of solutions. There is another one. If you converted your property, now we talk about Airbnb, Booking.com for holiday lets or service accommodation. There's a big buzz at the minute for those type of properties. And if you converted your residential property, you speak to your broker because you're going to need different types of finance going on. You may need to speak to your local authority to make sure that it is permitted for you to change that. I know in London that's not so easy, but you might want to think about, well, if I have a property that's on the seaside and rather have it as a standard buy-to-let, am I better to put it on Airbnb, Booking.com and get better rental income or holiday income if you like? And if you did that, then Section 24 does not affect that type of property. So you could be saving a lot of tax by changing strategies. Finally, before I let you go, you could buy properties in a limited company. Now, especially for people like me that buy properties for capital growth, creating a legacy for my child who go, I want to make sure that I have this property and I can pass it off to him to get, hopefully give him a better life than my childhood. Not saying it was bad, but give him more options, give him more choice. I want to use that limited company structure to give him that opportunity. Corporation tax rates, first of all, is going to be reduced to 17%, which is much better than you even as a basic rate taxpayer, which you pay 20% income tax. Corporation tax, 17%. 3% tax saving, absolutely worth doing. Mortgage interest relief cap, Section 24, affects you as an individual, but it does not affect you as a limited company. So just something for you to consider in terms of doing that. Hey guys, has this video been useful? Can you see how this or these solutions I described to you may help you? If so, please to type in yes. Tell me how you're going to change your property strategy or indeed how you're going to use these strategies to reduce tax. If this video has caused more confusion and you're not sure how to use these strategies, then type in no followed by your comments. And I promise you that I will respond within 24 hours to provide you as much input for you to save tax in the future. And don't forget that Monday evenings at 7 p.m. we do have a property tax open Q&A for you to ask lots of questions and for me to provide some solutions for you. So I look forward to seeing you on one of those, and have a great day until then.